Trump just unleashed a bombshell that's sending shockwaves worldwide. This isn't just big, it could bring an entire nation to its knees and possibly one of the world's largest companies. Now let's over to Bloomberg, where we picked today's straight up with a headline. As Trump threatens a 50% tariff on EU goods starting in June. And if you think back when we went on this 90-day pause, that the market actually bought into the fact that we were going to see a trade deal and lots of deals before the 90 days were up. Upon this announcement, we saw futures crashing because now the market's starting to realize a lot of other countries don't want to make a deal, and that President Trump is serious enough that he's willing to potentially impose a 50% tariff. Now, the challenge for the EU as well would simply send their entire economy crashing. The European Union, which was formed for the primary purpose of taking advantage of the United States on trade, has been very difficult to deal with, Trump said in a post on Truth Social. He criticized what he said were the trade bloc's powerful trade barriers, VAT taxes, ridiculous corporate penalties, non-monetary trade barriers, monetary manipulations, unfair and unjustified lawsuits against American companies. The problem is it appears they don't want to make a deal, and the penalty could be the sacrifice of their entire economy. And that's the move he's trying to make here, because if he can bring them to the negotiating table where they realize he is absolutely serious, well, then we'll see deals get made. The problem is the European Union doesn't realize they're in absolutely no position to dictate any terms or even negotiate. But there were signals the U.S. was unhappy with the offer, as Commerce Secretary Howard Lutwig noted on Wednesday that some trade negotiations have proved, quote, impossible. Like the European Union is just very difficult because, Germany would like to make a deal, but they're not allowed. And that's the problem here. It's an all or nothing deal. And if you go on the all side, well, what it means is if they don't jump in and make a deal, they're all going to suffer together. And right now, when we look at the state of what's going on in the European Union, you're going to see why they have absolutely no room to negotiate here. And yet investors never know whether the president is serious or this is a negotiating tactic. As it stands, investors are pricing mild risk as these statements are a bluff or the opening round of negotiation. In fact, investors are hoping that that's the case. We continue to see retail investors buying every dip in stocks, this one not excluded. And the hope is that somehow, some way, by the end of the 90 days, either there'll be another extension or we're going to see a mass amount of deals done. The issue for the EU is they're really not in any position here. If the market believed the president would follow through on either threat, equities would be significantly lower, and there's no doubt about that. We would see the markets come crashing down. But something that is surging higher, that is our trade on uranium we put out to our CTA Timer Pro subscribers, now up as a close of business yesterday, 18.93%. And just as I said it would, it's surging higher today, minting money for our subscribers, and you could join in on that trade and our next big trade. Grab the links in the description below. Use the coupon code for your free 30-day trial. Stay tuned to the end of the show. See how you can beat the machines and win. Because the EU is also moving forward with preparing countermeasures if negotiation fail to produce a satisfactory outcome. And this is absolutely baffling to me, because when I look at what's going on in the European economy, you don't see any room for them to fight here. And yet they're threatening with countermeasures. Let's take a look at their economy. We'll see what you think. As the Eurozone output is now down for the first time in 5 months amid services decline, we see it printed at 48.9, a very clear sign as it's under 50 of a contraction here. And how did that happen? Well, the services sector said, we're going to raise prices. And what happened? They got completely rejected. Now let's look at the manufacturing sector, who did try to absorb some of the price increases. And what do we see? It's now at a 33-month high. It's still in contraction at 49.4. But the issue here is it's actually going out of standstill mode. But for the European Union, that's not the right direction. They need to see manufacturing expand, and the threat of a 50% tariff could shove their entire economy not just into recession, but potentially an all-out crisis. While the overall fall in output in May followed a period of growth, new orders have now decreased on a monthly basis throughout the past year. The latest decline in new business was modest, but the most pronounced since December of 2024. So when you think about this from the perspective of retaliatory tariffs, if their new order book was surging, if demand was rising and people were getting hired, you think, well, they've got some latitude to fight. But the new order book is telling us that what's going to happen in the Eurozone is going to be rightfully ugly. Let's take a look at some U.S. data to understand what's going to happen in the Eurozone. As we look at manufacturers' new orders of durable goods in blue against continued unemployment claims in red, and you can see throughout most of the time when we see a deceleration or even a contraction in new orders, well, it impacts the labor market, as we can note here back in the mid-1990s. It happened again here right around 1998, and then, of course, going into the dot-com bubble, new orders actually collapsed, entered a deep contraction, and that put a lot of workers on the unemployment line. We didn't see that happen again until the global financial crisis. It happened right before the pandemic. Now, you'll note around 2015, we didn't see that happen, one of the few times, but now look where we're at. We see going back to 2022, new orders were on a decline. They entered a contraction, and despite the fact they've surged higher here, manufacturers haven't been hiring. They've just been giving out more hours, suggesting what we're seeing in Germany, that collapse in new orders, means there's going to be a lot of people on the unemployment line. I'll show you why it's going to happen soon. Because Eurozone companies were able to deplete their backlogs of work in May as new orders fell further. So keep this in mind when people go to work, if there isn't enough new orders for them to work on, if there's backlogs, they still have a job. The problem is when you have a lack of new orders and your backlogs eventually run out, well, your need for employees goes right out the door. Outstanding business decreased for the 26th consecutive month and at a solid pace that was most pronounced in 2025 so far, suggesting things are going to get very bleak for manufacturers in the Eurozone. A 2-month period of marginal job creation also came to an end in May, with employment unchanged during the month. Again, going the wrong direction if you think that they have the power to sustain a battle over trade with the United States. Here, a slight rise in services staffing levels was canceled out by a modest fall in manufacturing workforce numbers. That said, the pace of reduction in manufacturing employment was the slowest for a year, but notably still a decline. Staffing levels decreased in Germany and France, and you can only make you wonder if they get hit with a 50% tariff, it's going to be the blow that takes their economy out, wipes them out completely. President Trump knows this, and yet what are we hearing from, of course, the politicians? That they want to fight, they want to drag this out, but yet their economy is saying they actually have no ability to do that. The EU is also moving forward with preparing countermeasures if negotiations fail to produce a satisfactory outcome. Problem is, I think they're going to be headed into a recession, and those countermeasures are going to be completely meaningless. Nations and trading blocs have been racing to cut deals with Trump to avoid higher tariffs. I think it's not just about avoiding higher tariffs, it's about avoiding having your economy plunge into a recession. The reality of the situation is we're already facing that to begin with. We're looking at a payback period from the pandemic, now a payback period on top of that from front running the tariffs, and a lot of people are starting to realize we need to get deals done, we need to get them done quickly, because if it doesn't happen and the global economy hits one of these air pockets, it's going to put a lot of people on the unemployment line, and then the issue is the longer they stay there, the worse the situation gets. But I'm not sure I understand here why the EU is thinking they can retaliate and fight back and draw this out, because based on what I'm seeing, their economy is headed right into recession. What do you think? Should they negotiate or should they retaliate? Weigh in the comments, what would you do if you were the EU? But like the European Union, it's very difficult because, Germany would like to make a deal. And well, there's a good reason why. Because German business activity falls in May despite a rise in new export orders. Look at this. You see once again what happened in the services sector. Now a contraction, just like the broad Eurozone, 47.2. And why is this happening? Once again, what have we seen across the Eurozone? Is service providers said, look, we're not going to absorb these price increases. We're going to pass it on to consumers. We've been making the statement. The cure for higher prices is indeed higher prices. And what consumers in Germany and throughout the Eurozone are saying is that is exactly true. The services sector took a hit. They continue. They're going to be laying off next. But look at German manufacturing PMI, still in contraction, although at a 33-month high, printing at 48.8. Still the wrong direction and the steepest decline since September last year amid reports from surveyed firms of customer uncertainty. Total new business across manufacturing and services combined fell modestly and to the greatest extent since January. So while the politicians are saying, look, we don't want to make a deal, we may even want to retaliate, underneath their economies are falling apart and quickly. The latest data showed another broad-based reduction in backlogs of work midway through the second quarter, and when those are gone, so too will be a lot of jobs. Furthermore, the pace of depletion was slightly quicker than recorded in April, again suggesting there wasn't enough new business. That means more backlogs were being worked through, owing to the easing capacity pressures in the services sector. Outstanding business and manufacturing came close to stabilizing, registering only a marginal drop that was the weakest in almost 3 years. And again, you look at the issue here, we had this big boom following the pandemic, and everybody thought the economy around the world was going to see new highs, new levels of demand. And we said, when you strip away all this pandemic stimulus, it's going to come down to a normalized level. Well, that's what we're seeing happening in the Eurozone. The problem is, you put 50% tariffs on them, and they're going to find that the new normal for their economy is a whole lot lower. It's going to lead to a lot of people on unemployment. So I want you to look back now and understand why Trump's move here could bring an entire nation, entire course economy to their knees. Absolutely can happen. May saw a slight decrease in employment across German private sector as a modest uptick in service sector workforce numbers was offset by further job losses in manufacturing. Remember, where manufacturing jobs go, services jobs will follow. The pace of staff retrenchment among goods producers did, however, ease to the weakest since January 2024. So the problem is the tariffs are already starting to bite. They're only going to get worse for the Eurozone, and yet they want to retaliate. Makes absolutely no sense to me. But again, what do you think? Should they agree and make a deal, or should they fight and watch their economy go into recession? Because something else we did not expect, of course, today was the fact that President Trump would single out one company, and one of the biggest in the world. As Trump threatens a 25% tariff on Apple if iPhones are not made in the U.S. And my friends, I can tell you the probability that Apple is going to build iPhones in the United States is somewhere near zero. Yet this is the first time we've seen him deviate from his attack on countries to now singling out a single company. Want to know from you, should the trade war just be limited to countries, or should it include companies as well? Weigh in the comments below. I've long ago informed Tim Cook of Apple that I expect the iPhones will be sold in the United States. America will be manufactured and built in the United States, not India or any place else, Trump said on Truth Social. If that's not the case, a tariff of at least 25% must be paid by Apple to the U.S. Can you imagine what would happen if every company got hit with a 25% tariff if they did not manufacture here in the United States, on top of the fact that you see a country-by-country tariff? It could be absolutely devastating. Of course, Apple didn't respond. But building iPhones from scratch in the U.S. would be extremely difficult, even for a cash-rich company like Apple, with a lack of domestic engineering and manufacturing talent, making that nearly impossible in the short run. And I want you to be thinking about this, because it takes on average 3 years to build a factory, sometimes even longer. So the notion here that a lot of companies will move manufacturing here, well, keep in mind, how much longer is President Trump's term? Well, a lot of companies are going to be thinking about that. But I want to know from you, should Apple manufacture products sold in the United States by making them in the United States? Or is the current system good enough for you? Maybe they move to India or somewhere else and have their production there. Weigh in the comments. Love to know what you think. A former senior Trump trade advisor said she expects a flurry of deals will come together near the end of the tariff suspension period on July 9th, and we could not agree more. A lot of countries want to get this behind them. The global equity markets want this behind them. Everybody wants to know. A lot of companies, consumers, everybody is eager for this to get wrapped up. The problem is, 90 days is an incredibly ambitious period of time, she said. My sense is there are real negotiations for approximately 18 key trading partners, and that, after July 9th, countries left on the cutting room floor will be handed a document with commitments they can either take it or leave it in exchange for a new tariff rate. We've already heard from President Trump that is the likely path, and what is going to be the outcome. Of course, July 9th is going to be the day that a lot of people are focused on, including the equity markets. And as we turn to Congress now, the U.S. debt limit nail-biter looms. The Senate ponders Trump tax bill. So you can see some of the rush here to get these trade deals done and get tariffs on the books, because what it will do is bring additional revenue in. And we know that the Trump administration needs that in order to help push through a lot of these tax cuts. I'm sure a lot of stuff will change, according to Senator Josh Hawley of Missouri. I know a lot of my colleagues have a lot of ideas about things to change, and that's the question here, is the House bill is now going to face a change. Everything's going to be potentially something different. So not only do we have uncertainty in the trade war, not only do we have uncertainty that single companies like Apple could be called out and have a tariff applied to them, there's still uncertainty if we're going to see this tax bill pass or not. If it isn't keep in mind, there's a big risk here because that means taxes for Americans at the end of the year are going up, less money is spent in the economy. When you factor rising prices and tariffs and rising taxes all together, the foregone conclusion now isn't just a recession, but the risk is an all-out financial crisis. But you can still make money in the markets in the meantime. Check out this trade on uranium that we put out to our CTA Timer Pro subscribers. We saw the technical setup. We saw the left shoulder, the right shoulder, and the head. But it was on the breakout of that we noted from a machine positioning standpoint that they were set to be big buyers, and they did. They drove the price right up into the 6-month volume profile. And we told you on the show that if we see price pull back and hold that zone, it's going to go higher. And today it shot up over 9% at one point and is looking to move even higher. Now, how do we do this? Well, each and every day we look at machine positioning across the broad equity, bond, currency, and commodity markets, and we backtested every time a signal hits. And those that have the highest probability of generating a positive return, well, they show up right here on our hot list each and every day. But in addition to that, you get the machine positioning across all the different sectors to review. You get the daily report, the tradable signals. I review all of the trades and give you my opinions on the best ones. We give you risk control levels, a full tracking of trades and returns, a weekly update, and here's the best part of all, you get a 30-day free trial. We're so confident that you can make money trading our signals, that you can make money trading things like uranium like we just did, that we want your first 30 days to be on me. How do you do that? Grab the links in the description below. Use the coupon code for your free 30-day trial. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.